Morning, Fractal Effects team. We're just in the middle of the morning session. So before we get started, please make sure you read the disclosure clause in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have a very interesting setup. Today was PPI. Usually we avoid NAS, but then we also had 1030 crude oil inventories for oil. So both of these assets were going to be a little all over the place. So we're going to look at NAS, but we're going to use this mostly to just read the ticker tape here. I'm not looking to take any setup here. It's kind of a muddied up model. We have a downside expansion model, and then we broke the manipulation move to the upside. There's your NYC fair value gap, but it became a runaway gap, or sorry, breakaway gap, when we didn't tap it. And the NAS came all the way down, took out the other side of the MM, the other side of the manipulation, right into the DSD low, and gave us a double break into the DSD low. So you got a lot of things happening now. But all the momentum is to the downside. So now I'm just going to wait for a confirmation, and hopefully it's a bearish confirmation. That way these two strategies do not conflict. And then we'll take it from there. But outside of that, there's really, so we do have divergence here where US 500 didn't even take the other side of the manipulation range. We came back up into this first 5M fair value gap. But as it stands right now, I cannot buy this market. So now I just need more confluence to show us exactly when and where it wants to push down from. So what happens after we get a double break? We get a retracement back to our blue zone, which already happened right there. Just going to zoom in. Right there, we've already touched the consequence encroachment of the blue zone. Sorry, we got a lot of boxes painted here because we're sitting in two different 4-hour fair value gaps. There's a 4-hour fair value gap here, this big purple box, and then this 4-hour fair value gap here. So we retrace back to the blue zone. We've left no fair value gaps in here at all. Nothing in here. So I'd want to see a 5M bearish fair value gap now created. And US 500 could fall in suit, where it would just bounce off of this, give us a 5M fair value gap, then take the manipulation range here. But again, it's pretty muddied. We have divergence. We have a DSD low that's been hit and rejected. Not to mention the news. This was the news gap right here, left by PPI. The drop at 830, which has already been filled in. And we have a breakaway gap, which just happens to be the New York fair value gap. And as you guys know, I'm not a fan of these runaway markets where we don't at least fill in the New York fair value gap. Now remember, the indicator paints this out for you, but this is the first 5M fair value gap that was painted after the market opened. This is crucial. This can help you figure out exactly where the market is right now. Like, we are below it. This is bearish. But we should at least hit it, reject it off of one of these directions. So again, double break here. We did not take out the lows, so US 500 is the stronger pair. But I cannot buy this market right now. We have a clean break to the manipulation move up. Fair value gap, that's a clean MM. It just hasn't been tapped yet. And we have a double break to the downside. So the only thing that would make me even interested in possibly buying this market would be a bullish confirmation. When we get a bullish confirmation from the spotlight strategy, you'll see like a triangle form. We're going to break the dealing range to the one side. And I want to see where it's sitting as far as the New York fair value gap. I want to see if we tap it, reject, or if we get on the other side of it. But those are the only two things that would make me interested in buying this market right now. Otherwise, all the confluence is to the downside. Even though you see this push up, this doesn't mean anything to me. This is just a retracement. It's retracing back to the New York fair value gap, which is good. That's what we want to see. The question then becomes, where are we going after that? Right now, everything is bearish. And at the very least, we could be bouncing off of here to potentially take out the low on US 500. Just got to remain patient. And no, you cannot buy this market into the New York fair value gap. I've told you guys a million times, just because I know where it's going doesn't mean I'm going to take it there. That's not what the confluence is telling me. The bigger move, right now at least, the way it's showing us, is to the downside. Remember, this is not a time lagging indicator. This is a market translator. This is translating the information, showing us what the algorithm that controls the market is doing and what it wants to do. This is a big reversal area, DSD low. This was painted out at least 2 hours before the market ever even hit it here. That's not a time lagging thing. That's not a time lagging indicator. The DSD low, if I get rid of it right now, let's say we just remove it altogether. There's no point here. There's no reference point here. This is not something an indicator would tell you. This is a special area that took years to figure out. We sat down with a chaotician to figure out the math behind this. And it's not a coincidence that it bounced right off of this. But right now, again, everything is bearish. Cannot buy this market. There's only one thing that would save it. Bullish confirmation from the spotlight strategy. And then we'd have to get, in doing so, we would get above this because the bullish confirmation would come up here. So that means we would take out these equal relative highs. We would get on the other side of the New York fair value gap. And we'd get that bullish confirmation, then a retracement, and then eventually a push up to take out the all-time highs. But everything right now is bearish. So the way it stands, what I'm guessing is we're going to come back into the New York fair value gap right here. It's a smaller one on US 500. Potentially reject and then drop, and the US 500 will fall in suit. Just got to remain patient. If this had been a clean MM to the downside, then I could have taken it to the New York fair value gap, but I would have needed a foothold, a 5M fair value gap. I'm just going to zoom in here real quick just to show you guys. Sorry, it's a little laggy because of our live stream. There is no 5M fair value gap here. Nothing's been created. We're actually just pushing back up to the end dog, the new day opening gap. All of these are rejection points. This is a high resistance liquidity run if it does get pushes past this. It would have to get through the the new day opening gap. It would have to get through the purple zone. It would have to get through the New York fair value gap to eventually take out these equal relative highs. And don't be fooled, by the way. Most people, when they see that, they're like, there's the equal relative highs, we're going to run those. Not always, especially if they're on the other side. If they're in the direction of the higher time frame trend, then we'll get to those later. The market's going in that direction anyways. Right? It's like Uber, it's picking up passengers along the way. What it wants to do, though, is trap you and go in the opposite direction. So when you see equal relative highs that are in the opposite direction of the trend, those are more likely to be hit first. US 500 unable to get past that 5M fair value gap. So this could be our retracement from the double break, retracement, and then let's see if we get a 5M bearish fair value gap here. Remember, there's a lot of rules we still got to get past. We still got to create a 5M bearish fair value gap. We then got to tap it and then create a 1M bearish fair value gap. Remember, hit a fair value gap, create a fair value gap on a smaller time frame. Then we got to tap that 1M fair value gap and close over the series of candles. There's a reason why we have this many items, like points of confluence off of our checklist. So we do not get caught up in the manipulation of the market. Just got to remain patient. I think going forward, what we'll do, because some people find all these levels kind of distracting, I'll have a second screen where I have all the markups. And then we'll have a clean screen for you guys where you only see the blue zone strategy. For example, something like this, I guess. That's the spotlight strategy and the blue zone strategy. Those are the only two that really matter. It's a little cleaner now. Those 4-hour fair value gaps are gone, and you can see that we're bouncing off the new day opening gap and the blue zone. There goes US 500. Just got to remain patient. So the fact that we're getting all this rejection off this 5M fair value gap, the market might not come up in here until later, until after 1:30. And certain patterns, as soon as you see them, you know it's going to be muddied waters and you can just avoid them. This is one of them. When I've hit the DSD on one of them and I'm getting all this rejection, remember the DSD, I don't expect it to go past the DSD. These are usually my targets. These are my TPs. So if we've already hit it and rejected off of it, and even though US 500 hasn't hit it yet, this could be a reversal point. And if it is reversing off of here, remember that's the 10 o'clock reversal. We hate that. Remember, we do not want to trade the 10 o'clock reversal. Excuse me. On the 4-hour time frame, the 10 o'clock candle should be a continuation candle, not a reversal candle. If I showed you this market on a 4-hour, it's actually consolidating. It's pretty ugly. We literally swept out the lows, took out the high. Now we're still in that range. We're still stuck in this range right here in this 4-hour fair value gap. Looks like it's pushing up. Jump back down to the 5M. So remember, US 500 was the stronger pair. If US 500 takes out these lows, the manipulation move to the downside, then this is signaling more confluence for the bearish side, when the stronger pair becomes the weaker pair. Just got to remain patient. Still want to see a 5M bearish fair value gap created. That'll let me know that this market actually wants to start pushing down past the DST low to take out London lows. London lows on a day like today would be my last TP. Again, I'm not trading this market. We're just going over and doing the ticker tape for you guys. This is PPI day. This is one of the days you want to avoid. You should not be in the market, but it's a great day to learn a couple of things. Make those notes. See why it's not the best day to trade. Yesterday was CPI and actually set up perfectly. It gave us a very, very clean entry. We posted that on our TikTok. But it has to look obvious. We only take trades that are high probability and look obvious. This is not one of them. $10.45, about 15 minutes till 11. As mentioned before, right now as it stands, we cannot buy this market. We're looking for more confluence to help with the bearish bias. Now the market could still jump up and tap the NYC fair value gap since it is left open. But usually it will probably do that after 1:30 on a day like today. Anytime you have a breakaway gap, sometimes it comes back and fills it right around 10:30. Otherwise, it'll happen around 1:30, where the market will actually go up into here, spike, and then eventually continue in the same direction that it's been going, which is down. But right now, we just need more confluence to show that this market wants to push down. Just got to wait. Just a lot more rejection here. US 500, this is pretty much consolidation. We could be seeing a power of 3. Consolidation, manipulation, and distribution to the downside. But let's see. The beauty of this strategy and these two strategies combined is we know at least at all times which direction the bias is leaning. Especially for new traders, they don't always know. When you get something like this, where we're consolidating here right at midpoint, it's hard for them to decipher that. But there is nothing here that's telling us that this is a buy yet. So 50% of those, 50% of that decision, that bias is already off the table. And it's not ready to sell yet because we don't have a foothold. We need to see a bearish 5M fair value gap created now. Until we get that, there's nothing. We're just watching paint dry. Still just waiting. A lot of gesticulation happening here. This is still consolidating, still seeing a power of 3. It could just shoot up here, tap the NYC fair value gap. That would be your manipulation move, and then we could just push down. But until we get a bullish confirmation, we cannot buy this, and until we get a bearish fair value gap, we cannot sell this. So we're just kind of stuck here watching, waiting and watching. Be patient. One of those setups is going to happen in the next 15 minutes. Getting some movement here now up to the purple zone, but still no foothold. We have a 5M bullish fair value gap being created now. Let's see if that sticks. Actually, it's only on US 500. So US 500 is still the stronger pair. There's too much divergence here. This is one of the reasons I would not trade this market. We have a double break to the downside on NAS, which means the market wants to push down, but we've already hit the DSD low, which is usually my targets. On US 500, we have not even taken out the bottom of that manipulation zone, which means this is so strong that it wants to continue up, but we do still have a clean MM, which means that it could just drop from here. So it's playing both sides. This is engineering new liquidity. There are people that are going to go short off of here, and there are people that are going to go long off of this fair value gap because they see that we have not taken out the lows, and that's just confluence that the market, or at least US 500, wants to push up. We bounced off the blue zone. This late in the game, I'm still hoping that it bounces off of here and pushes down. Seven minutes till 11. Still just waiting. So that's what we wanted to see. We wanted to see a push to the downside. Let's see if this 5M fair value gap sticks. And this becomes my foothold to go short. Do not want to see this fill in. Looks like it just filled in. So it dropped down, it tapped the 10 a.m. fair value gap. That's the first fair value gap that's created after the 10 a.m. candle, the 4-hour candle opens. That's just to gauge where those two candles meet. The 6 and the 10. So we have not, hold on, let me zoom in here. We just tapped the MM low, but we did not take it. Remember, the indicator paints that out for you. I just painted it just to make sure that we knew exactly where it was. Still nothing of interest. There's nothing here you can trade. At least this takes the guesswork out of it. You're not sitting here, you know, hoping and trying. No, there's nothing here right now. Our foothold to go short just got filled in. And if the market takes off without us to the downside, that's fine. Sometimes the best trades are the ones you don't take. Capital preservation is our primary goal. Making money is second. This is a good sign. We finally broke the MM to the downside. Let's see if we get that bearish confirmation. If we get a bearish confirmation on either of these, that solidifies the deal. You cannot buy this market. It's either a sell or nothing at all. Remember, we are high probability traders. As soon as you get that confirmation, there's an 80% chance that the market will not break the other side of this dealing range until the end of the session. That gives us an opportunity to look for an entry to go short. What are our targets? This is the other reason I'm not really interested in trading this. Our targets to the downside are just London low. London low for NAS and the DSD low for US 500. That's not really a 1 to 3. Could it go further than that? Sure. But we're aiming for the low-hanging fruit, the safe move, the in and out. Because it could take a long time to get down here. We're at 11 o'clock. Let's see if it gives us something. Now that we've taken the manipulation move to the downside on US 500, if this gives us a 5M bullish fair value gap, before it gives us any kind of bearish confirmation, this could push up. Because for the most part, it's already delivered everything it needed to. We tapped the New York fair value gap, the opening gap. We were supposed to create a 5M bearish fair value gap, tap it, and then push down into the DSD low or possibly London lows. But it keeps filling all this in. This is just one big consolidation. This is not something we want to trade. As soon as you see this many candles consolidating, this is not worth it. This is a high resistance liquidity run. They're going to manipulate this. for as long as they can. This is 1 hour of consolidation. At the very most, you want to see maybe 4 or 5 candles in a consolidation. 5-minute candles, so that's 20 minutes. 20 to 25 minutes of consolidation. You don't want to see an hour of consolidation. That just means they're playing both sides, engineering new liquidity. Yeah, this late in the game, I want to see a confirmation before I make any moves. And if NAS just drops and takes out London lows and drops right into the new week opening gap, this orange box down here, then I'm done for the day. Because that was our low-hanging fruit anyways. We've already had the double break, the retracement. It offered no fair value gap, but if it just drops without any offerings and any footholds created, then you're done. It didn't want you to get in. So they're going to most likely hold US 500 up. I think NAS wants to tap the NYC fair value gap before it pushes down. If it pushes down, I should say. About 27 minutes left in our stream. If you're not in a high probability trade setup 1 hour after the range formation, then you're done. Pack it in, go to work, go hit the gym, whatever it is you do. Either come back for the next session, Asia session, or wait till tomorrow. At the beginning, you only need 1 successful trade a week. And as long as you stick to the rules and you get that 1 to 3 risk to reward, you're making 12% a month. So you can wait. You can wait to find that one perfect trade setup. Where we have students that are doing 12% easy monthly because they're sticking to the rules. I'm not saying there won't be losses. Nothing's 100%. But if you stick to the rules, then there's certain days you just avoid. This day, for example, you don't even trade this. This is already a high impact news day. You have your PPI news that dropped at 8:30. On top of that, you have all this consolidation, over 1 hour of consolidation, where they're muddying up the waters and they're playing both sides. Just walk away. We have to be here. We're here for educational purpose to show you guys exactly what days like this look like. But you as a trader, you don't have to sit through this. These are the days where you should be able to recognize immediately that this is going to be a high resistance liquidity run. It is going to be a day filled with consolidation where they're engineering new liquidity, playing both sides and trapping traders on both ends of it. Who wants to be a part of that? Lucky for you, you have the economic calendar. You should be following some economic calendar. We look at Forex Factory. But you should know when, excuse me, what days the news is going to drop, the high impact news drivers, exactly what time, and avoid those days. Sleep in. You don't have to trade on those days. We're only live today because it's a commitment we made. We want to be live Tuesday, Wednesdays, and Thursdays, and eventually 5 days a week, even if there is high impact news. For example, today we would have normally traded oil. Oil is usually a safe haven asset when you do have a high impact news day on for the U.S. any US related assets. However, today also happened to be oil inventories, US oil inventories, which is technically considered a high impact news day for oil. So it's kind of a perfect storm. There's not too many things you can trade today, safely, I should say. Everything was going to give you consolidation. Everything was going to give you sloppiness. The fact that US 500 cannot get over this 5M fair value gap lets me know that they're going to push NAS up into the NYC fair value gap, and then most likely drop both of them. Because as it stands right now, US 500 is becoming the weaker one. This was the stronger one. When you see that shift, when you're doing divergence and you see the shift of the stronger one becoming the weaker one, that means it's falling in suit to go in that direction. So if it was any other day, any other setup, I'd wait for NAS to jump into the NYC opening gap, which is also a breakaway gap, and then follow both of these down. But we'd still need that foothold. We still need a 5M bearish fair value gap. And neither one of these assets looks like it wants to drop yet. So just gotta wait and watch. 22 minutes left in our stream. So if we're not in a high probability trade setup in the next 22 minutes, we conclude the session. And that's it. It's simple as that. There are people that scour the markets for hours on end. It's 1 hour. It's kind of like the gym when some people tell you that they go to the gym for 5 hours. You're like, what are you doing for the 4 other hours? If you can't find a high probability trade setup, there's only 3 time periods to trade. So if you can't find a high probability trade setup during that window of opportunity, you come back later for the next session or the next session. But you don't sit there for 4 or 5 hours sifting and hoping and trying to find something. And this is why it's great to have a community, because there's three primary assets that are always kind of a good or offer up good trading opportunities. And if you have friends that are watching, and we're eventually starting our Discord soon, so we'll have that community where people can actually communicate with each other and set up these teams. But you want to have one person looking at US 500 and NAS and watching for that divergence. You want another person looking at US oil and another, we use Brent crude oil as divergence, but you want to have somebody looking at US oil and a diverging pair. And then thirdly, have somebody taking a look at maybe gold. Gold and what you compare gold to for its diverging pair, you can either look at silver or you can even take a look at USD itself, the US dollar. So if the US dollar is going up, gold should be going down and vice versa. They have this reverse relationship, but you can still use it for divergence. Those are the three, like again, if you want to create that community and you have these people looking, then you can find a trade setup real quick. You know, if you guys are sitting on a Zoom call and one person suddenly calls out US oil, like US oil is moving, we have confirmation, we've met all the points of confluence. Otherwise, sometimes you're stuck looking at one specific pair, but they all offer. Take a look at our TikTok, fractal.effects. Go to our Instagram, fractal.effects, and you'll see that there was trade opportunities. One yesterday, 2 yesterday actually, we took one. On CPI day, we took one successfully. It was NAS. It was the quickest, easiest setup you've ever seen. I believe it was a clean MM. We manipulated up, created a 5M fair value gap, tapped it, dropped right into the DSD low, done for the day. US oil also offered up a great entry. I think it was a little later in the day. That's the only difference. But if you're not in these trade setups that quick, then call it a day. So now we're back at the NYC fair value gap here. And this is what you want to watch for. You want to make sure if US 500 suddenly becomes the stronger pair again, then we're either going to have more consolidation or they're both shifting and moving up. Because remember, the DSD low, as mentioned before, is a strong point. This is where I take my TPs. I don't like setting up trade opportunities that mean we're going to push past these zones. So this could signal a reversal. The fact that we've already hit this, and if we get a 5M bullish fair value gap before we get a bearish fair value gap, this thing could be pushing up. But we cannot buy this market until we get a bullish confirmation, and that will most likely come too late. NAS still the stronger pair. I believe NAS has taken out these highs, or almost. Either way, it'll take out these highs before US 500 does, most likely. A little over 15 minutes left in our stream. Let's see if we get anything. So NAS making a run for the New York opening gap. But as mentioned before, I cannot buy this market. There you go. That's what I was waiting for. There's your double break. for US 500, and this will become the fair value gap of interest. Once it closes, there is a bearish confirmation if this closes down here. So now if you look, NAS never touched the NYC fair value gap. I want to see if this candle closes down here and gives us a proper 5M bearish fair value gap in here. So this has to close and we have to watch one more candle, and that could be our foothold. Look at this. I said it before, if we take out London lows and tap the new week opening gap before it gives us a foothold, that's it, we're done. Two minutes left. If we get this bearish confirmation, we cannot buy this market. It's a sell or nothing at all. One minute, 50 seconds left. So there's London lows, there's a 4-hour fair value gap down here. So I want to check the 1 hour. I don't think we left any 1 hour fair value gap. No, too much consolidation to leave a 1 hour. Swept the highs. Half. There you go. Most likely to take out these lows. "33 seconds left. Taking these lows as well. And I'm hoping we get this bearish confirmation, which we most likely will. 21 seconds. Five, four, three, two, one. So there's your bearish confirmation on both of them. It's also created a new blue zone. Now we have to create this fair value gap though. So another 5 minutes to see if this fair value gap sticks. If it just keeps dropping from here, then it never wanted us to get in. There you go. NAS is already technically delivered. I'm not interested in this market anymore. When you're looking at these two diverging pairs, if one's delivered, then you got to treat it as if both of them have delivered, because they can turn around. So on a day like today, that was my low-hanging fruit, London lows, and the beginning of the new week opening gap. Could it keep dropping from here? Sure. I'm just not interested though. So we'll conclude our session there. But as you can see, as mentioned before, our primary concern is capital preservation. And that's what this indicator did. It preserved our capital today. We didn't get into any misleading trades. We knew we couldn't buy this market, not until we had a bullish confirmation and got above the NYC fair value gap, and our bias was always bearish. Just unfortunately, it dropped without us. It didn't create any foothold either, so you can't feel left out. You can't feel bad that you didn't get into this move. That was supposed to be our foothold. 5M bearish fair value gap created, tapped, and then the push. And as mentioned before, it's not that this can't continue to keep dropping. It's just that we're not interested anymore. We were only aiming for the low-hanging fruit, which for me was the new day opening, or sorry, the new week opening gap and London lows. We've taken London lows on both of these assets. So again, we'll conclude our session there. We'll be live again tomorrow. I believe, let's check the economic calendar real quick to see if there's anything happening tomorrow. Tomorrow is Thursday. We have core retail sales and unemployment claims dropping at 8:30. So we're good. We'll see you guys tomorrow. Please hit the subscribe button, turn on your notifications so you know when we're live. Please check us out on social medias under the handle fractal.effects. Have a great rest of the day, and we'll see you guys tomorrow.